Hello, action takers. Welcome to Live Blissed Out, a podcast where I have authentic conversations with business owners and subject matter experts to help us get the scoop, the 411, and the lowdown on a variety of topics. Tired of hesitating or making decisions without having the big picture? Want to be in the know? Then this is the place to go. I'm your host, Marissa Houston, helping achieve bliss through awareness and action. Thanks for joining me. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice. This is episode 19. Want to know about how credit scores work? We'll talk about that. My guest is Diane Rapue, owner of Trinity Business Finance, LLC. Serving others and making people feel loved and cared for is her calling. She earned a Bachelor of Science degree in business with an emphasis in administration. Her experience and history in business and finance go back over 25 years. She thoroughly enjoys learning about all businesses and connecting those businesses with the financial sources they need. Her journey has been comprehensive, allowing opportunities to learn, grow, teach, and understand multiple financial products while connecting businesses with the appropriate solutions. Diane offers a workshop called Show Me the Money, Secrets About Business Financing the Bankers Won't Tell. You can learn more about Diane and her services at trinitybusinessfinance.com. Hey, Diane, welcome to the show.
Thank you so much, Marissa, for having me. I'm just so excited today to talk to everybody.
I'm thrilled to have you.
I wanted to talk today about credit scores of all things, and just to kind of give a little bit of background with regards to how credit began. It all started back in the old time general store, your local country market, where the owner knew you very, very well, and you knew him, and he allowed you to carry a credit forward and not pay for the items that you were looking to purchase until you had the money later in that month.
Kind of like the general store when you watch some of those cowboy movies or whatever,
Yes.
and they go to the general store. That's what I think about, right?
Exactly, with the wooden floors and all of that. Yeah, totally. You know, because the owner knew you so well, he knew where you lived. He knew all about you. He knew your family. And so he would trust that you would come in and pay for what you had on your account, or per se your store credit line. And when you had the money, and of course he knew where you worked and when you got paid. And so he would always expect you to come in shortly thereafter to pay off that outstanding bill that you'd been accumulating over time. Obtaining credit nowadays is very different than that kind of old time credit situation, because people don't know each other. They don't know each other by name. They don't know where they work. You don't know your neighbors. You don't know who you're talking to. So the credit score is really a way to understand who that person is. What risk am I going to be taking to lend them money? Basically represents the creditworthiness of an individual.
Why do you feel that we need to have a credit score? What exactly do we use it for?
It's basically the way for a lender to look at something tangible and get to know you, get to know how you've paid your prior creditors, what types of transactions and purchases that you've made, and just to know if you've been able to pay those people over time in the past, which would give them that kind of warm, fuzzy feeling of, you're going to pay me back as well.
How do they go about calculating that score? What comes into play? What are the factors that they have to look at to ensure that you are credit worthy?
There's a lot of formulas and variables that go into calculating a credit score. It includes your payment history, the number of accounts that you have, the amounts that you owe on those accounts versus your high credit limit. The types of credit also comes into play. So there's a huge number of variables that basically all come together and determine what that credit score is. Your credit score can affect the interest rate that you pay to a lender, and it will make a difference whether or not you get approved or declined. It's a lot like when you're in school, you have a GPA.
Grade point average, right?
Yeah, your grade point average. So your credit score is very much like that. but with regards to lending and your ability to repay a lender. In school, all your grades go into one cumulative grade point average. Same kind of concept, all these different variables with regards to how you've paid people in the past, what types of accounts that you've had, length of accounts being opened, all those sorts of things go into basically your credit score is your GPA for financing.
So we talked about the things that are gathered to calculate the credit score. What exactly affects the credit score?
There can be many things. Some of it is how often do you apply for credit? Are you doing that on a very regular basis, which could go to the concept of maybe you don't have the income needed, and so you're having to go out there and get additional credit to make purchases. It can be effects of how you pay your creditors. So if you constantly pay them late, 30 days or 60 days, obviously that goes to your character and if you're able to pay back things on a regular basis or not. How long that you've had the credit available to you. Some people look at that in different ways. You have some people who schools have thought that as soon as you get into college that you should apply and get a credit card so that you can start establishing that credit and show a very long credit history. Others schools of thought are, well, you should wait until you actually need the credit. I'm one who I'd rather have that there and available and show that I have a history of payment available to me, and people would be more likely to lend me money that way.
So essentially, we need to establish some sort of history, correct? Because going back to your example, there's no other way for them to really measure your character when it comes to paying back your debt. And so having some sort of established history is very important at any age, because at some point, if you're going to need to buy a car or a home or purchase anything with credit, then that history is what is looked at.
Correct. There's also different types of credit that go into play on your credit score. For example, revolving credit, meaning credit cards, things of that nature, do not get looked at as highly because there's such a variable type of lending resource. And there's also service credit, whereas you have agreements with power company and your cell phone company and gym memberships and internet providers, things like that. Those get looked at a little bit higher than revolving credit because in many cases you've had to sign an agreement for those. And then the kind of the highest level of credit is installment credit, which is home loans, mortgages, auto loans, those types of things. And the main reason why they look at those so highly is because you have qualified to obtain a loan for a specific amount of money that's over a very specific term. So it's the consistency of your payment that really makes that kind of the cream of the crop with regards to credit that is given to someone, and then that being very heavily weighed into your credit score as to how you pay that.
Oh, that's really interesting. So there's different levels of importance, essentially, when it comes to looking at the type of credit and how you respond to it.
Correct. So if somebody has 20 credit cards, for example, their credit score is still not going to be nearly as high as someone who has maybe only 1 or 2 credit cards, but they have a mortgage or an auto loan, because that consistency required of repayment on a monthly basis really shows that character of that borrower, that they have the ability to maintain that repayment plan and have done it consistently.
So it's more of not a one-off, but more of something that has to happen on a consistent basis.
Yes, because it just shows that you have the discipline to make that payment on a monthly basis. Whereas on a credit card, you can choose to make the minimum payment, or you can pay more, or you can pay it off. It doesn't require you to really have that same level of consistency and responsibility with regards to repayment.
So what exactly is the ideal credit score that we should be aiming for?
Credit scores go from 850 all the way down to 300. So from 850 to about 800 is considered exceptional. That's somebody who has multiple lines of credit, different types of credit, and have paid it very well. Very good credit is 799 to 740, and then 739 to 670 is good. Usually when you're talking to creditors, they want to see someone who has at least a 650 and higher. It depends. Like you'll hear on TV commercials, A credit will receive this type of interest rate. That is going to be in your 750 to 850 range. So you go into that car dealership and you're expecting to get that 0% financing, and then they pull your credit and you have a 640. That's in the fair range, and you no longer are going to have that ability to get that 0% interest financing. So 669 to 580 is fair, and then anything under 580 is considered poor. So that 720 to 800 range is really what most creditors really would love to see.
So the two things that we're looking out for is that you qualify for credit in the first place, but then the score that you have is going to determine the interest rate or how much value you can get out of that loan. So for example, if somebody has a really good credit score, they may get 0% financing on the financing that they do, whereas somebody who comes in the lower end of the spectrum, they are going to have to pay a much higher interest rate. And therefore, it's very hard to determine exactly where you fall until they do the credit score, which is why when you watch these commercials, they always say as low as whatever the percentage is, because it really depends on where you fall in that range.
Correct. So, and there's a lot of other things why a credit score is so important, because it extends beyond your purchases and lending, because your credit score many times is used by potential employers, once again, as that getting to know you kind of phase to see what is your credibility, what type of person are you, do you pay people in a timely manner? Also, if you're wanting to get, say, an apartment or rent a home, landlords look at your credit score and really utilize that as well to determine whether or not they want to rent to you. So there's a lot of laws that they're trying to pass, whereas people cannot look at that credit score to make those determinations. But my guess is that those probably are going to fall by the wayside. How else am I going to get to know you as a person? It's just kind of one of those universal ways that we are able to do that. That credit score is so very important to so many things.
So then how often should we be checking it? Because I know that varied for a while. Like I remember they used to tell us check it once a year because if you do too many checks, it dings your credit score. I mean, there were just all these little nuances that a lot of us as consumers don't seem to understand. So in today's environment, what is the recommended amount of times that we need to go in and look at our credit score just to make sure we're on track and that everything is looking good?
Well, the good news is that everybody wants to make a buck, I guess, and there's various resources that you can utilize to obtain your credit score. So your credit history is actually free. So your credit history is through the credit reporting agencies. So there's 3 of them. There's Experian, Equifax, and TransUnion. The most popular in most cases is Experian. And so annually, you can request a free copy of your credit history, your credit report. They do not put your credit score on that report. That report, though, is very, very important because when you get it, you need to really comb through it and look at it and really make sure that all the accounts that are there are truly active, correct accounts. Now, to obtain your actual credit score, you usually have to pay a price for that. So there is a distinction. So credit report, i.e. credit history, is free. And minimally, you want to do that on an annual basis. Your credit score, you have to actually pay a company to get that. For example, like annualcreditreport.com, they provide a free credit report from all 3 credit bureaus. But in order to get your credit score, you would have to maybe use a company like myfico.com or Credit Karma. Companies like that, they will ask you to pay for that because it is an actual service.
And I didn't even know there was a difference. Sometimes the credit card companies will say, we provide you with free credit scores as part of your credit card service. Is that something that people can avail of when they sign up for a particular credit card company?
Yes, to distinguish themselves, a lot of the credit card companies have started doing that, where they will, for free, provide you with your credit score, which obviously comes with your credit report. So you would get the score and then also the credit report history. And that's a great way to get it because you're already doing business with them. And really, to be perfectly honest, it does cost them a little bit of money. But overall, when you sign up and sign on with any kind of credit card, any company that you sign up with to get credit from, they have the legal right to pull your credit, basically review your credit at any time they want to and as often as they want to.
And does that impact the score itself when they do that?
It can sometimes, and it only comes into play if you, for example, are in the process of getting an auto loan. So you go to an auto dealership and you don't have financing already set up. So you need to get lending for this car. You fill out their credit application and hand it over to them. So for example, if you were going to a Ford dealership, they would first send your credit application to Ford Motor Credit because that's their lending institution. And if you, for example, did not get approved with them, it would get kicked back to the finance manager at that dealership, and they would then begin the process to send your application out to a whole bunch of other folks to try and get you that lending because their end goal is to sell the car, right?
Right.
They want to get that car sold. So if you don't have financing, they're not going to get that car sold. So they will then, who knows how many people they will send that out to. Now, the problem with that is obviously one credit pull on your credit bureau for Ford Motor Credit is not going to harm your credit bureau score. But if you get over 5 credit pulls, meaning someone going in and inquiring about your credit within a 30-day period, every single credit pull after that first 5 in that 30-day period begins to reduce your credit score by approximately 5 points.
Wow.
Yeah. So if you didn't qualify and then they sent that out to 25 other lenders, all 25 will pull your credit.
And that adds up pretty fast.
Yes, it does. So if you've got 25 folks, the first 5, quote unquote, are free, basically, don't count against you, but the 20 after that do. So you're talking 20 pulls at 5-point reduction on each one. That reduces your credit score very quickly. And if you have credit cards out there and they're doing their annual or maybe quarterly pull on your credit, that's just one more pull that would be listed during that time. So timing is very crucial when it comes to your credit score and making sure that you're not doing things that are going to harm it. Now, to stop that from happening, for example, when you talk to them, you can let them know you only want them to run your credit application for that auto through Ford Motor Credit only. And they don't have your permission to run it through anyone else. If that gets declined, they have to come back to you and have a conversation, which then gives you the opportunity to maybe go to your local bank and ask them if they would lend you the money or your credit union. That way, you're the one getting the financing in place rather than them.
That's a great tip because when you go into it aware like that, you can preempt it and at least know what to anticipate so that you can set yourself up for success from the get-go and not get any surprises on the back end.
Exactly. So annually at a minimum is what you want to be checking not only your credit history, but your credit bureau score. But if you sign up for Credit Karma or some of these other groups, by paying that fee, you have the ability in many cases to check that credit score as often as you would like.
And I was just curious because we talked about in the beginning that, your credit score is basically a reflection of your character from a financial perspective. Why does somebody pulling your score impact that? Because obviously you didn't have any control over that. You didn't do anything specifically that would give the impression that you were not worthy of getting financing for whatever you were looking for. So why is all this pulling impacting our credit score in a negative way?
Well, the overall idea behind that is that potentially you could be in financial trouble or really in a situation where you need significant amounts of money. And so creditors look at it kind of poorly, I guess you'd say. If, for example, you're trying to finance purchasing a piece of property or something, and you don't have a credit score worthy of getting that lending through a regular financial institution, You may go out and decide you're going to do it on credit cards. So you apply for 20 different credit cards. Then those creditors start to wonder and start to be concerned about who approved you and how many of those do you have available to you. So now I look at your credit bureau and you only show you have currently 3 credit cards, just as an example. But I can see that you have these 20 inquiries from all these other various Visas, MasterCards, different things. And I start to wonder, okay, now I can look at your picture on this credit history and say, okay, you really could only go out and put $40,000 on credit cards. But now I don't know who all has approved you because I just see those inquiries. So now I'm concerned, maybe you now have $200,000 available to you. But I also know you can't afford that.
Got it. Okay, that makes total sense. Now I get it.
Yeah, it's kind of that unknown is the problem. And so the credit score starts to decline because you have increased the risk of me lending to you. By going out and applying at all these places, I really have no idea who's approved you, who has not, and really, what are you doing, right?
Yes.
So that is an additional risk to that lender, to that financing institution, that they have no idea. So they just have to look at what they can see, and that credit score starts to reflect that because it is increasing your risk associated with lending to you.
Oh, that was so well explained. Now it makes total sense because in the beginning, I honestly didn't understand why that would impact anything. And that explanation was wonderful. Given that, what are some things we can do to raise our credit score? Let's say it wasn't where we wanted it to be because maybe there was a situation where you did buy that car and you didn't know and they pulled your score 20 times, like you said, right? And you just weren't aware of it. And it's too late now. And now we're down in the 650, right? And we want to raise that up. So what are some best practices, I guess, that we can start to apply to raise that credit score?
Well, and in that example that we just gave, that you went out and weren't aware and you just started getting all your credit pulled by a ton of different auto lending folks, and now you've got a 650 credit score. Well, the first and foremost is time, because the credit score will come back if the reduction is solely based on number of inquiries.
What's the timeline? Does that come back in 3 months, in 6 months, a year? Does it vary?
Usually it's 6 months. Now, of the 3, some of them have a lesser time frame. Some of them have a little bit more, and a lot depends on what you do during that time. You know, if you literally don't apply anywhere during that time, it will start to tick back up pretty quickly. But if one of these credit cards that you already have and utilize decide to pull your credit, it could then kind of stifle that for a little while longer. You have no control over that. But things that you can do besides time is, for example, if you just don't have a great credit score because maybe you had some late payments. Those late payments, they will always be listed, but usually it's about 18 months of payment history that shows up on your credit bureau. So if you had a stint where you lost your job, whatever the case may be, and maybe you paid your mortgage late 3 times, you would probably want to wait 2 years, honestly, before you tried to either refinance your home or go get another mortgage because you showed that you couldn't pay. But quick ways that you can increase your credit score, I'm very guilty of. I have a lot of store credit cards. If you don't really need those or you're not really utilizing those accounts very often, then why not just close them? Don't even have them out there, because once again, they're showing that you have the ability to charge X amount of money on that account. And that could, I don't want to say hurt you, but creditors going to take that into account that, well, you have available $25,000 in store credit cards. You may only have $200 on one credit card at this time, but you have that available to you. So there's that concern that you could all of a sudden go on a shopping spree and hit 5 stores, and next thing you know, you owe a significant amount of money that maybe you can't afford to pay if I lend you what you're asking me to.
And I think that the reason, and I'm just speaking for myself, for example, I remember way back when I did sign up for cards like that, it was because there was a special offer. Like, let's say we're buying a new appliance and they would say, well, you could get 6 months financing on there, and then we would also give you $100 off your purchase to get this credit card through us. And so it was such a great deal that you'd open it. So then going back to that, if somebody were to decide, it's worth it because I'm going to save some money, let's say they pay it off in 6 months like they planned, can they just close it at that point?
Yes.
Just close it as soon as they finish using it.
Yeah, that way, most people have one or two credit cards that they utilize on a regular basis, right? A Visa, MasterCard, American Express, that sort of thing. And those are ones that, you're going to be utilizing for all kinds of purchases, maybe through your credit union, so on and so forth. Those are fine. I usually recommend that people don't have more than 4 of those because you want to keep track of them. If you have it out there, you want to be utilizing that credit card on a reasonably consistent basis, just so that you keep getting the statements, just so that you can know no one else is utilizing it. There's not been any identity theft and things like that. The goal really is keep your credit history, your credit bureau report down to a very manageable number of accounts so that at a quick glance, you can know immediately if those are all of yours, meaning no one's gone out and opened something in your name, that your kid's now grown and you co-signed for something and that's no longer relevant. You want to keep it very fresh so that you can immediately at a glance really know what accounts are yours and what are not, if that's the case. And then also ones that are stale. Just go ahead and get those accounts closed out, because then you also assist with the risk of identity theft, because if someone got a hold of that information and it's not something you use on a regular basis, then you're not expecting to get a statement every month.
It's kind of just sitting in your drawer and you're not seeing it. And then all of a sudden you find out somebody had access to it.
Correct. And they could quickly change the mailing address and other things, which is what usually happens. And so you're not expecting to receive that statement. And now they're getting that statement and not paying it.
So let's say that there was an error. You looked at your report, you found out that there's something wrong here. And now you have to either dispute it or find a way to fix it. What are some best practices for handling that?
It's pretty interesting. The Fair Credit Reporting Act, it came along and it provides you with the ability to get those free credit bureau reports. But the Federal Trade Commission actually went through a pretty long study, and they said that they found 1 in 5 consumers had at least one error on their credit report, and 1 in 20 had errors significant enough to cause them to suffer having to pay a higher rate on their credit. So there's kind of a process. You want to request a fresh report directly from the credit bureaus just to start that process. You want to pour over that report and make sure that you really check all errors. They're showing that you were delinquent and you were not, or just the balances may be off. Maybe they're showing that there's a collection out there that you didn't pay them and they put a collection on your credit bureau. So really looking through that credit report and going over any large or small errors and mark it up, highlight those mistakes. Then you write or type a dispute letter. You can just do that yourself and say, these are the various issues. Don't dispute the error online. You want to put it in writing. And you send that to the separate disputes, multiple letters. And for example, if I had a dispute and it was on all 3 credit reports, I'm going to want to write that letter then specifying that issue, that error, and send it to each of the 3 credit bureaus to make sure that they receive that letter. Keep it simple, include any evidence that you have, and then mail that dispute to the credit bureau and to the data furnisher. So for example, FICO, there's other groups that actually furnish data that are not the companies that put it together. But when you get your credit bureau, you'll see that. So if, for example, Visa is reporting that you were 30 days late 3 times and you have proof that that is not the case, you would want to send that dispute letter to each of the 3 credit bureaus, so Experian, Equifax, and TransUnion. But then you would also want to send it to Visa and say, hey, I'm disputing this. You want to stay organized so you have on there when you sent the letters, because each of the credit bureau reporting agencies, those 3, They have to meet specific guidelines and deadlines with regards to when they receive these dispute letters and how quickly they get them answered. And if they send a request, say to Visa, saying, hey, she's reporting that she was not 30 days late and she has proof, that Visa has to respond back. And if they don't respond back in that amount of time, then the credit bureau reporting agencies have to take it off. They have to rectify it because the dispute did not get answered in a timely manner.
So there are timelines, and that's why it needs to be in writing so that they can look at each individual situation and follow procedure so that it's all consistent.
Correct. So, and you don't want to accept no for an answer. So if they send back and say, we're not going to be looking at this dispute, things like that, they have to legally do that. That is one of the biggest reasons for a lot of the legislation with regards to credit bureaus and credit reporting agencies, is because there was not a very good dispute process put into place. And so now they're being held to that process. So you can get errors and mistakes corrected, but you have to be vigilant and you have to be willing to take the time, because it does take time to do that.
Yeah, and it's unfortunate that if something was wrong, it can be frustrating because you didn't have anything to do with it. It was just recorded incorrectly, and now you're having to spend all this time following up just to make things right again. But at the very least, there is a process and something we know now that we can do to rectify the situation, because at the end of the day, what's important is that you get your credit score where it needs to be so that then you can avail of all the benefits of having a good credit score.
Correct.
Thank you so much, Diane. This was so helpful. I know I learned a ton about credit scores, and I think that a lot of our listeners then will be able to say, wow, I had no idea that I could do this or that. And really, that's what it boils down to, right? All of us need to be vigilant. It's definitely to our advantage to keep the credit score in good condition. And so checking it on a regular basis and just following up when things aren't right will go a long way to making sure that we get the financing that we need at the best possible rate. Thank you, Diane, for being on the show. I really appreciate it.
Thank you so much for the opportunity, Marissa. I really appreciate it.
That's all for this episode of Live Blissed Out. Thanks for listening, and thanks to Diane Rapue for being my guest. If you find value in our show, please visit liveblисsedout.com to reach out, subscribe, and share on social media. This show is made possible through listeners like you. Thank you. So long for now, and remember to keep moving forward.